All right, good morning, everyone. Let's get going. It's been a wild last kind of, I'd say, 10 hours of trading. The trading's been open globally. It's been some of the wildest you'll ever see. Obviously, in the States, we saw an absolute butchering. We saw the NASDAQ down 3.5%, S&P down 3.2%. That followed on this morning. We've got, as we speak right now, NASDAQ futures down 3.8%, S&P futures down 2.5%, and a total bloodbath going on, risk unwinding. FTSE's down 3.5%. The German DAX also down 3 and change. And this is all coming on the back of getting totally decimated on really Thursday and Friday, but Friday in particular was just incredibly ugly. We've had so many things that have happened here, but that drop on Friday was on the S&P was the worst drop since May 2012. Worst day in the Dow since 2008, and the VIX just went absolutely mad. There were a lot of things that I was kind of thinking were signaling capitulation. People were paying twice the price that they were paying the day before, twice the premiums for put options. The amount of the put to call ratio was out of this world high. A lot of things like that happening. There's two things that come to mind that's really driving this sell-off at the moment. I would say that one is obviously China. I mean, without question, we had China basically down 10% as we speak. And the other is oil. So I think oil's a little bit of a sleeper, but oil below 40 obviously sets off some alarm bells. And what happened is you've got in the States especially, the biggest amount of high yield debt or junk bonds that are out there are tied to oil and nat gas companies. And so especially a lot of the fracking groups and a lot of the marginal stuff is tied to a lot of that high yield debt, and that is what people, I think, are one of the things that people are really worried about. The other thing obviously is China. China being the second biggest economy in the world, basically is as big as the States. Every single piece of news data, every single thing that you can see there coming out is just shocking at best. And so it's what's really, I think, driving the market are those two factors. If we look at Asia overnight, absolute bloodbath across the board. The Nikkei down over 4%, the Australian ASX 200 down over 4%. Kospi was the winner there, only down 2.5%. Shanghai, you can see getting decimated. Last I saw, it was actually down a little bit more than that, and the Hang Seng also taking 4.5%. So just really nothing good to look at there across the board. We had a lot of things, just every asset class going absolutely crazy in full-on risk-off fashion this morning. So, there will be opportunities that are there, but I think you've got to tread carefully. I mean, maybe it's a situation where fortune favors the brave, but geez, you really, it just feels like there's so much risk out there. Right, chart of interest is just the S&P 500 future. So look at how quickly we lost that. We're in that little consolidation there, and in 3 sessions we have literally done 8% in S&P futures, and that's pretty remarkable. And that's only halfway through today's session, so it's pretty spectacular. All right. Corporate action today, we got Super Group and Sun International are out this morning. I don't even care about the earnings. It's, I think, out of the context of what really should be paid attention to this morning. That's not. I don't think where necessarily the money's going to be. Money's going to be in and following market action and picking up a trend one way or another early. Looking at stocks going ex-div today, the only one's really material, the only one that I think is really worth noting is MTN, which is obviously 4 Rand 80, so don't forget about that in this morning's open, which will obviously be dramatically lower. Okay, no market data really to worry about today, so we're going to get into a couple maps. I'm really, I'm going to keep this super simple. on the on the chart side, because you can throw most of the charts out the window. I think this morning the volatility is going to be so high, and levels are not going to necessarily work like they normally would. But what's really I think important out there is, one, German DAX. Here we're looking at a 5-year chart here. I'll zoom it forward. 10,000 level in the DAX, absolutely massive right now as we speak. This is the spot market. So we're obviously not open yet in the spot market, but the futures market is trading below this by about 150 points. But this level, 10,000, is absolutely massive. You can see how we ripped up through this. This is last year, about the time that we announced stimulus in the Eurozone. We've now come down about 20% off the highs in Germany. And to be totally honest, I would say that Germany is probably one of the better situated at the moment. The market's cheaper relative to some of the others. There's relatively decent growth at the moment in Europe, especially compared to what we have seen, and they've still got their foot on the gas there in terms of quantitative easing. So I like if you can hang on over a rough ride. I think that buying the index here is a relatively decent idea. It just, provided the market can stabilize it a little bit. Next thing we're going to look at is 10-year treasuries, which have just gone ridiculous. They've absolutely just crapped themselves through the 2% floor. Not hard. We're trading at 199 at the moment. But this is, this move has just been so hard. You can see just absolutely in line with what we looked at in that S&P chart a second ago, and totally bombing here. That in itself is massive. That's telling us where the risk picture is. If we start to see yields creep up, I think that's telling us that people are willing to take a little bit of risk again. So, maybe watch this one as one of the best leading indicators that's out there at the moment. I think another one that's one of the better leading indicators that we can look at right now is really the Rand, not the Rand, emerging market currency yields, or not currency yields, emerging market currencies. This morning we saw the Rand opened. I watched it last night at 12 o'clock when we crossed. Trade up here at like 1265 was about where we opened. Traded up to, 1365. We traded at 1367. You can see we strengthened up a hell of a lot from then. I mean, we've bounced over 3% from the lows, but that, I think, in itself is showing you what the risk picture is. You see the Rand driving higher, and you see some of the others, the Mexican peso, the Turkish lira, and those kind of the currencies driving higher. Then I think that'll be a place where you can, a time when you can look to potentially take more risk. So the best risk measurements that we can really look at right now are emerging market currencies, 10-year treasuries, and I actually think that oil is got to be on that list as well. So we actually want to see oil get back above. Sorry, I'll zoom forward a little bit here. We want to see oil get back above $40 a barrel, and ideally above what the March lows were. So, I think that those things in themselves are really what the leaders are going to be. Or they're going to give us a good hint as to whether you're going to want to add or take away risk, throughout the day's session. So just watch all those indicators closely. That's going to be, I think, what